MACD trading strategy. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And in this video we are going to discuss about the MACD indicator. And let me tell you that this is a very powerful indicator and highly used in the stock market. So basically MACD stands for moving average convergence and divergence. It is a moving average based indicator. That means it is invented by making use of the moving average. And if in case you don't know what is moving average, I have made a couple of videos on it, wherein I have explained how this moving average is formed, how the price takes support and resistance on it, and how can we trade the moving average crossover. All of these videos are saved in one of the playlists. The link to that playlist will be flashing above, or you can check out the description. Alright, so I was telling that MACD is a moving average based indicator. And exactly in this video, we are going to understand in detail how the MACD is formed, how can we take a trade on it, where to buy, where to place the stop loss, where to exit, everything in this video along with live examples. So if you don't want to miss something that can improve your trading and make you money in the stock market, make sure that you're watching this video till the end. Do not skip it. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure that you do it so that you won't miss any upcoming videos or updates on the stock market and technical analysis. Alright, so let's start with the MACD. Now as you can see on the screen, that is how the MACD looks like on the chart. It is made up of two types of line and a bar graph, which is histogram. The blue color line in this indicator is called as the MACD line, and it is formed by subtracting two types of moving average of length 12 and 26. The next orange color line, or in some charting platform you will find it in red color, is called as the signal line, and it is basically an exponential moving average of length 9. And based on the interaction of the MACD line and the signal line, we make trades in the market. And the bar graph that you see below is called as the center line, or some traders also say it as the zero line. It basically shows the difference between the MACD line and the signal line. That is, when you subtract the values of these two lines, you get the center line. And the center line indicates momentum in the market. It is like if you want to catch a trend, maybe uptrend or downtrend, you need strong momentum and good volatility in the price. And we can identify them by analyzing the center line. So that is how this MACD indicator is made. Now let us see how can we take trades on this indicator. You see, whenever the blue color line, that is the MACD line, crosses the signal line from the downside, it means the market is bullish or is going to go bullish. It simply indicates that the market will move in uptrend. So we have to look for buying opportunities in the stock when the MACD line crosses the signal line. And when the signal line crosses the MACD line from the upside, it simply means that the market is going to go bearish. So we can take fresh short entries over here, or look for exiting the previous long trades that we have taken. So it is not very difficult. Just remember that when the MACD line crosses the signal line from downside, we will look for buying. And when the same MACD line crosses the signal line from upside, we will look for selling opportunities in the stock. And if we look at the histogram, the rising bars on it will indicate that there is an uptrend in the market with strong momentum. And we have to look for such trades in the market where we can capture good trend along with good momentum. Or when the histogram is falling or uncertain, just in this case, it simply means that the market is in uptrend but with low momentum. So that is what all of these three lines in the MACD indicator indicates us. But before continuing with this video, let me warn about some mistakes that most of the traders make while using MACD. You know, some beginner traders in the market, they take the trade by directly looking on the MACD. They ignore the price completely and then they have huge chances of making loss. Remember that price itself is a very important indicator. We are trading price and not the MACD. So it is necessary that we use MACD as confirmation for some price actions. So it is like a price action. It can be anything, either support or resistance, or some candlestick pattern or chart pattern breakout, or even breakout from the trend line. Every price action on the chart plus MACD buy sell confirmation is where you will make perfect trade in the market. Alright, and the second thing that I wanted to warn you about is that avoid using MACD in a sideways market. You know, when the market is in consolidation, you will get multiple buy sell signal on the MACD chart. This type of signals in the consolidation market are not very reliable, and you can easily make out this type of unreliable indication by looking at the uncertain histogram that forms in a consolidation market. So before using MACD, remember these two things. First is that use it along with the price action, and second is avoid using the MACD in a consolidation market. Alright, now let me show you some examples, some trades that I did using MACD. As you can see on the screen, the daily chart of the TVS Motor. It is a stock in the Indian markets. And over here you can see the market is in consolidation. And just like I told you, we got multiple unreliable confirmation and unreliable indication on the MACD chart. And like I told you, we have to avoid these signals because the market is in consolidation. So now over here you can see the MACD line gives a bullish crossover exactly at this point. That means we can understand the market may go in an uptrend, but this has to be confirmed by the price action. And exactly you see the next candle give a breakout of the consolidation zone. So we take a buy entry on the breakout candle. And on this candle we did some partial exit because the MACD was looking a little dicey. And over this candle we exited all quantity because the MACD gave us a sell signal. So we made a good trade, a good return in this stock by making use of the MACD indicator. Let me show you one more sell example using the MACD. You see, this is the daily chart of the Nifty 50 index. And over here you can see the MACD gave a bearish crossover signal, which means the market may go in a downtrend. And this got confirmed in the market by the candlestick patterns and various runaway gaps that occurred. And after that you can see the market heavily corrected. But unfortunately we missed this trade in the market. So it is like you cannot take all the trades in the market, you cannot capture all the opportunities. And in reality we don't even have to. We just have to focus on few trades, few opportunities that can make you good return in the market and avoid over trading. Alright, so that is all about MACD indicator in this video. We can even use MACD with convergence and divergence of the bar graph along with price. But if any beginner wants to understand this concept in the market, he may require some expertise and experience along with using various indicators like MACD or RSI. I will surely cover this topic in some of my next videos. Alright, so lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible. Also, if you have any doubts or any suggestion for the next video, you can comment it down. Subscribe to this channel and press the notification bell to not miss such many content on the stock market, technical analysis and trading. And I will see you in the next video.